Hello and welcome to today's and this month's edition of Facebook Live. It is our first Facebook Live for the new year. Everyone, Happy New Year and Happy 2019. I'm Tina Powell. I'm joined by Mark Germain, CEO and founder of Beacon Wealth Management. And Mark, today you're going to be talking about what topic?
We got the basics of alternative investments that we're going to give you. It's a very important topic. People are calling us regularly. And we were in an article last week in CNBC. Lisa Konish.
Lori Konish,
yeah,
right?
And we got that out, so it's great.
Great. And you can check out that website, that article's on bwmllc.com in the news section, which I'm happy to report.
Right.
So before we get started in talking about investments, you know the drill here.
We got a compliance disclosure.
Exactly. This is only
specific.
Educational in nature. Please consult with your own financial professional, somebody that understands your personal situation and goals before you do anything investment oriented. So now let's get started. We're going to talk about the what, the how, and why of
Basics,
alternatives.
not so common. We'll do each of those items.
So why don't you kick it off?
Good. So alternative investments, alts, or alternatives as a nickname, is one that's not a conventional investment, not like your typical stock and bond. All right, they usually have some unique characteristic or a unique thing that they're investing in, so hence the word alternative. We're not investing in IBM, we're investing in something else. And they encompass a wide range of opportunities. It could be gold, it could be marijuana, it could be cell towers, any combination, even the lottery. You can bet on what's going to happen on the lottery.
And even marijuana, right? Is
well, we said marijuana,
right? As an alternative investment.
Yeah.
And aren't these alternative investments, or alts as you call them, aren't they reserved for like uber wealthy, super rich types of people? Or is this for the general public? Can anybody invest in alternatives?
And today, anyone can invest in them because they have a number of vehicles. At one point in time, they were reserved for the wealthy, but now with some of the things that are structured into mutual funds and ETFs, you can get a lot of alternative investments. There's a firm that actually just does alternative investments in mutual fund format. So they're not just for the super wealthy anymore, but they are with a caution. Okay, and we're going to deal with some of those cautions, right, Tina?
Great, and I know that right now you're going to kind of tell us the 4 different types of groups. So the way that the alternative investment landscape is organized, this is just general?
I think it's important to understand that hedge funds encompass every type of investment strategy you may have, from hedge funds that go long, short, and hedge funds that just do short investments, that just bet against things going up. You have private equity, which is getting stock of a company, but not the same stock that you're buying on the New York Stock Exchange. It's different, okay? And it's run in a much different fashion. Very careful, very high expenses in most of those. Real assets, you know what real estate is, you know what gold is, you know what owning automobiles and rental properties and all of those things are, stamps and all of those things are alternative investments to what you normally have. And then structured products that have been created for the last 20 to 30 years, which are deriving their value from the underlying asset. Example, and a really easy one to give, is at one point in time, Merrill Lynch developed a stripped treasury. What does that mean? Okay, we take the interest out, and the interest is sold in one tranche, and then the principal is sold in another. That's a derivative or structured product.
So it's very sophisticated. You could go from the very simple of maybe renting out your rental property or your boat or your car to getting like really super sophisticated.
And going in with a whole bunch of people and buying an apartment building.
And so I also know too that one of the things that we were going to talk about today is the fact that there are a lot of different types of characteristics of these alternatives, and traditionally we think of this thing called risk, right? The idea is that, wow, alternatives equals very risky. Is that true?
Well, let's put risk in some type of basis to compare it to, right? So let's put risk as being compared to the stock market. If the stock market is a risk of 1, we can compare anything to how risky it is compared to 1. So in theory, alternatives should be less risky than 1. So they should be 0.5, 0.3, whatever. What does that do? So if you have 50% of your portfolio in 1s and 50% in 0.3s, the average risk in your portfolio is less. That's the concept. That's not always the case. Okay? be careful that yes, it may be less risky, but it may increase your loss potential.
Okay.
Okay, so how far can you go down? Can you only go to zero, or can you go below zero?
So each individual alternative investment has to be really evaluated on its own merit.
Absolutely.
Because there's lots of
Right.
different considerations. Liquidity
Let me
is
whip through these.
Okay,
Because
sure.
you're going to talk about liquidity, and I know you're going to give a quote, which is great. But
Okay.
oftentimes with alternatives, you lack liquidity. Example: many real estate investments, you can't just say, I want my money out now,
Right, you can't
because you have to
sell
go
that.
sell it. It might take 60 days to sell it, right? Complexity and unpredictability of the investment. Probably a great time to tell people, if you do not understand it, you should not invest in it.
That
It's
makes a lot
very,
of sense.
very important. If you're sitting with me and I explain an investment to you and you don't understand it, so if a client does that and they don't understand it, I say, wait. Get to the point that you understand it, or don't invest in it. There's plenty of investments out there. Second thing, really, really important. There is no investment that you must invest in today. So if someone says, this is an alternative investment, this is only going to last a day, you must invest today to do it, or you lose it, lose it. Walk away. All right? Anyone tells you that, there is no such thing as an investment you must do today. So complexity and unpredictable. Terms such as capital call and lockup periods. So if you give me your $1 million, Tina, excuse me, I'm going to lock it up for 3 years. Well,
What if I have a family emergency?
bingo. Bingo. You can't get your money back. So be very careful that you read the document and you understand. And if you're talking to someone trying to sell you an investment, say, show me in the document that it says I can get it or I can't get it, and how long. High cost of due diligence. Oftentimes looking at these things, you're going to have someone look at them. And if you're doing real estate, there's a high cost of hiring attorneys to do all of the documents and do all the due diligence and go out and make sure that the rent roll is what they told you the rent roll was. Legal restrictions may be that you have to be a professional investor, you have to have a certain net worth, you must have a certain amount of cash, etc. But these capital calls are the things that could kill you. So that, you put your investment in and you put your $1 million in and they come back and they say, oh, we didn't make as much money as we thought. We have to pay the mortgage and we need from you, Tina, another $10,000. You don't have it. And we need another $100,000. Okay? We've had investors come to us and say, oh, I've got to liquidate my account because I need liquidity for another investment that they have somewhere else. Performance reporting oftentimes differs. So you may get a cumulative return rather than what you're used to seeing in your mutual fund or your portfolio that says this is the return and it's averaged per year over the last 3 years. You might get a cumulative return.
Or you might, in the case of real estate or some sort of physical asset, like let's say that I have my, I don't know, I'll use a very simple example, a stamp collection or a gold collection. Not all the time do you have the existing valuation on that asset,
No, you
so
have
there
to get
might
it
not
appraised.
even be
You
a
have to
performance. Okay.
Appraisals may be, right? So
Very,
the
very
reporting
interesting.
differs. There's a lot of things to consider in alternative investments that are just not what you think about on an everyday basis.
But they're here, I mean, we went down some of the advantages and disadvantages, but what can you say, what's the real reason why people want alternative investments as a part of their asset allocation?
We believe that the alternatives that we want to bring to our clients must overall balance out, mitigate the risk so that the portfolio return is more consistent. Hence, you're reducing the risk through diversification. And much like I explained to you with a risk of 1, a risk of 0.3, if you put the assets together, your average risk is less. 2, enhance your return through what is called alpha. That's more return because of the management and what you invested in. Oftentimes, you may reduce the risk of the portfolio, but you're not really going to expect an increase in the return. We try to have both things happen, right?
Right. And then I think the last that you were going to talk about was this idea of these new opportunities. So if there are things investing that we haven't necessarily heard of, is it a good thing? Are these new opportunities something that we should be attracted to in the first place, or even take a risk on?
We go right back to what I said a couple minutes ago. If you don't understand what you're getting into, you shouldn't get into it. So there are new opportunities, and we're going to talk about one of those, right? So if we kind of look at it and we think about what was the new opportunity, and we had all kinds of clients coming to us at the end of 2017 saying, I need to be in cryptocurrencies. And we said, no, no, no. If you want to do it, you have to do it on your own. We're not putting any of our clients into cryptocurrency. It was $19,000 in September 2017, and it went down to $5,800 in the middle of this
Wow,
year.
that's a big drop.
75% of your money. We didn't nobody lost that much money in the recession of 2008 and 9.
Wow.
So, and that happened in the period of 6 or 8 months. So there is something called blockchain, which is the technology that supports cryptocurrency, and that might be an alternative investment, which is a new opportunity. Blockchain is here for the long term. Okay, this cryptocurrency, that cryptocurrency may not be, right?
So then,
Private equity, real estate, great, very, very good investment if you have the right analysis and someone does the due diligence.
yeah, and I think we'll end with that because, and I really like what you said a little bit about how you have to know something. And then there's also too this famous quote, I love it, by Howard Marks, and he talks about not only knowing that investment, but also too the key criterion isn't can you sell it, but it's can you sell it at a price equal or close to the last price. And you had mentioned that price that you paid for that, house and wanting that.
Yeah, so
The last price that you paid.
Yeah, you pay for a house. You want to make sure that you get it. Real estate's liquid if you're willing to take a bath and lose some of your money, and that's not the case. That's not what people want.
So if anyone has any follow-up questions with alternatives, again, this was kind of a rapid style, a very quick discussion about it. But thanks for bringing it.
We could spend 3 hours
We
doing
could.
this
We don't know
discussion.
whether or not you'd want to spend 3 hours, so hence this is a quick video. But if anybody wants some additional information about investments or want to speak to you personally, how should they get in touch with you?
They can go directly to our website, send a question. There's a box to send a question to our website. They can also send to Carla, K-A-R-L-A, at BWM LLC. Saw your Facebook Live. Please answer this question for me. No contingency, no
obligation.
No obligation.
And being that if you are watching this broadcast on Facebook Live, it will also be on YouTube. But if you are watching on Facebook Live, please, you can also just send us a question.
It's not going to be on ABC or NBC?
Not this week,
Okay.
maybe next week. But you can send us a question via Facebook Messenger. So thanks everybody for the courtesy of your time and attention today. We hope that you have a fantastic year, and hopefully you found some of the information about alternative investments. Marky, thank you so much for sharing your expertise. Everybody have a great day.
Thank you.
Bye-bye.